Let's look at the earnings for the week. There is a lot of earnings this week, Brian. I pulled out my favorite each day. We have Palantir, Chipotle, Disney, Expedia, and Pepsi this week. Take a screenshot of this if you want to see their implied move versus their historical move. A lot of big movers out there for sure. Should be some interesting trades to say the least. But Brian, anything pop out and what do you want to trade?
Yeah, I think the most interesting one here on this list is Palantir. This is basically cybersecurity. This is, all the warfare that we're having right now, Ukraine, Russia, Middle East issues. Palantir really is in play. And I think this is an interesting one, Joe. When you look at the level of volatility, right, the implied move of 14% after earnings is massive. And historically, this thing has moved about 12% per earnings. This is going over the last average over the last number of quarters. So this is a one where when we get this level of volatility, I probably want to use some option trading strategies around that. Let's take a look at this chart right here. When you look at it, had a very nice head and shoulders bottoming pattern a few months ago. It sort of turned, it broke out to the upside. It's now trading at 16 and change right now. You see some of these levels of support and resistance. What's interesting here is if we zoom in a little bit on this chart, we're sitting right around 1670. I think we could get back above this 20 level and break through to the upside. The downside support is more like around 13. So a $3 or more move is pretty massive. That's almost a 20% to the downside. So I'm looking for a stock replacement idea here. I'm going to trade some options here. I'm going to use a call spread. With the stock trading around 1670, I was looking at this, the Feb 17 call that expires next Friday. I can buy that for only $1.25, and I can sell the February 20 call for 40 cents, net debit of 85 cents. This gives me a break even of 17.85. So from 17.85 up to 20, where I'd be called away, I would profit from this trade. But I do need it to get to that level to cash in. If the stock trades lower after earnings, I'm out that premium of 85 cents, which is, that's a decent amount, but given the fact that this thing could move 12, 13, 14% like the options market is predicting, that's not a lot of premium to outlay. And so this would be something where if I have some sort of account where I can be tradable and flexible, I may be looking to replace my stock here and add options trades.
Yeah, you got a call spread. Remember, stick around for the end of this show. We'll be talking about call spreads and options 101. But basically, Brian, you got a strike where you'd be willing to be flat, Palantir up higher, because we're looking at this implied move, like you said, not really expecting, a 50% upside move. You're just expecting a, range bound move, a normal move, and using the historical patterns to your advantage.